Exchange-traded funds or ETFs are investment vehicles that offer the diversification of mutual funds and the simplicity of stock trading in a cost-effective way. They replicate the performance of market indices and thematic benchmarks. A fund manager does not intervene, thus ETFs are said to be passive investments. Exchange-traded funds are used to gain exposure to efficient markets where all publicly available information about a given security is reflected in its price. For example, US large-cap stocks. They are also used by investors looking to limit concentration risk. And for those who want to profit from falling markets or amplify the returns of an underlying index, inverse and leveraged ETFs can be useful alternatives. Mutual funds are sought by those that want to beat their benchmarks or invest in a less effective part of the market. But in practice, a combination of ETFs and mutual funds that is aligned to an investor's risk profile can yield benefits in the long term.